George Soros, the old fox who brought down the Bank of England and earned over $1 billion in a single day. George Soros is a name associated with both admiration and controversy in the global financial world. He is not only a symbol of speculative intelligence, but also the architect of economic strategies that have changed market dynamics. The operation that brought down the British pound and forced the Bank of England to surrender in 1992 is considered a legendary feat, and arguably the defining moment of this financial old fox. From 1969 to 1973 marked a turning point for Soros, when he established the Double Eagle Fund, which later became the Quantum Fund. He partnered with Jim Rogers to build a partnership that generated an annual return of up to 35% throughout the 1970s. This was considered the foundation that allowed Soros to focus his resources on building his reputation and preparing for his life-defining battle. In 1991, a misstep by London in the whirlwind of history gave George Soros a once-in-a-lifetime opportunity. After joining the European Exchange Rate Mechanism, ERM, in 1990, the UK committed to maintaining the pound's fluctuation range within plus or minus 6% compared to other currencies in the ERM basket. However, just a few months later, the reunification of Germany in 1990 created an economic shock for the entire EU. Post-reunification, Germany had to raise interest rates to control inflation due to the massive cost of rebuilding East Germany. Berlin's move quickly strengthened the Deutsche Mark, putting tremendous pressure on other weaker European currencies, especially the British pound. At the time, Germany was in a completely different position. The unification of East and West Germany gave the country a significant economic advantage. Despite raising interest rates, Germany's economy was expected to grow rapidly due to its internal strength. Berlin was willing to maintain high interest rates for an extended period while still developing its domestic economy. Meanwhile, the UK was heading in the opposite direction: rising unemployment, sluggish growth, and a tough choice for the Bank of England between devaluing the currency or stimulating the economy. These weaknesses became the pound's biggest vulnerability. With the mindset of a true financial fox, George Soros saw the UK's situation and made his move. By July 1992, Germany's interest rate reached 8.75%, while the UK's interest rate hovered around 10%, a margin too narrow to offset the risks of exchange rate volatility. On top of that, the UK economy was deteriorating. Increasing trade deficits, falling foreign exchange reserves, and soaring inflation placed the British economy on the brink. George Soros stepped in and pushed it over the edge. He realized that to defend the ERM rate, the Bank of England would have to raise interest rates. But with an economy already on the verge of collapse, any hike would likely destroy it. The UK's insistence on maintaining a fixed exchange rate created the illusion that its economy would continue to grow, something that contradicted macroeconomic reality and external factors, especially Germany's position. Soros built a short position worth $10 billion, of which $7 billion was borrowed capital. At the time, this was the largest short position in history. Soros sold all the pounds he held, plus additional pounds equivalent to $7 billion, in exchange for Deutschmarks and other currencies. If the market moved as predicted, i.e., the pound depreciated, Soros only had to wait for the price to fall to his expected level, then buy back the pound at a lower price to repay the debt. To understand Soros's short-selling strategy, we need to understand what short selling is. Let's take a simple example. You're sure that the price of an iPhone 16 will drop significantly 5 years from now. To short sell an iPhone 16 and make a profit, you first need to borrow one from someone and sell it immediately, let's say for 20 million VND. Now you have 20 million in cash, but owe someone an iPhone. When the price drops to 15 million VND, you buy it back and return the borrowed iPhone, pocketing a 5 million VND profit. That's exactly how George Soros shorted the British pound, just on a scale worth billions.